Alright people, welcome back, and in this video I want to explain to you the core differences between three most common types of people that are involved in crypto. So we will start with the regular holder. So basically the strategy such a person is using is simply hope and pray, so to speak. So money sits in a wallet hoping for just price appreciation, meaning that you are basically bought and you are holding those assets, those cryptos, for a long-term perspective without any additional plan, so to speak, right? By being just a regular holder, such people are usually losing money in a bear market with no downside protection, meaning that you bought and you hold, right? And once the market starts to drop or shows a pullback or something, you simply try to live it off, wait it out, and essentially hope that the price will recover before entering multi-year bear market or something like that. Also, obsessively checking charts and prices all day. This is common between two types of people: regular holders and DEGEN traders. They basically bought something and they are just melting their eyes, the retinas, right, in front of the screens, simply because they want to see what's happening and react if needed, or it's just that newbie, so to speak, psychology kicks in, that if you bought something and you were not used to volatility in crypto, you want to check the prices all the time to see how much you made, or how much you're losing, so to speak. Also, all eggs in one basket, pure speculation. So usually such people are being invested in just a few assets, sometimes even one. This could be just Bitcoin, for example. Um, but what I mean by all eggs in one basket, meaning that they only have spot positions among few different cryptos and that's it. So there are no different plans on how to actually diversify within the crypto space, meaning that you can hedge, you can reinvest some of the money into the DeFi pools, yield bearing assets, etc., etc., tokenization, tokenized based capital markets, etc. So it's just like only pure speculation, spot positions, so to speak. Also relies on hype, influencers, and luck for decisions, right? Because let's be clear that, and it's pretty it's pretty obvious that most people in crypto space invest based off someone else's opinion. They saw a video about, oh, that XRP is really good. Some people saw a video that BTC is much better, or Ethereum or Base or Avalanche is gonna blow up because everyone on Telegram channel is speaking about it, etc., etc. So in most cases, more or less, those decisions are driven by someone else's opinion, also known as KOL, key opinion leader, and influencers. So if for most just regular holders, that's how they got involved in crypto, because someone told them to check out this and that, they invested, and now they're holding. Not everyone, some people do a lot of deep research, which is amazing, but the majority of them is just simply, oh, this guy is trusted in the space and he said to buy this and that, so I did so, right? So this is not the right approach in my opinion. And also, by regular holders and for the regular holders, just buy and hold people, linear growth only, missing compound opportunities. This is also very important, and this is why DeFi will always win uh, um, versus these regular holders or DEGEN, just pure like active day trading or something. Because if you bought some assets and you hold them for a long-term perspective, yes, the price appreciation can happen, but you are actually missing out incredibly on the compounding opportunities. Even if you're holding like Bitcoin, XRP, ETH, doesn't matter, like big assets, Solana, etc., right? Even if you would simply deploy them into liquid staking protocols or lending and borrowing provision, or something like DeFi pool with specific strategies, you can easily generate yield and compound it back into your assets. So in multiple years perspective, you could have way more of the same asset without actually selling it, speculating, buying and selling, or trading, right? And this is why XRP and FXRP on Flare is such a big deal, because before, me included, for many years, since 2016, we just bought XRP, continuously accumulated XRP over the years, but you just basically, all you were able to do is just hold them, which is not a bad thing. But right now it starts to unlock slowly on a decentralized manner the ways to actually get yield of it and get more XRP within a longer term horizon. So that's how the regular holder thinks, so to speak. I'm not saying that everyone is like that, but most people do. They just bought something based off someone else's opinion and they're trying to hold it and expect price appreciation. Now let's take a look at the DEGEN traders, which is kind of gambling. So those type of people usually chases 100x moonshots and loses 90% of portfolio. I mean, that's the average, and I believe most likely it's going to be even more than 90% of people loses those portfolios, because basically all of this narrative of get rich quick, make it out of the trenches, so to speak, as DeGen people like to say, is chasing some sort of a new narrative, a new meme coin, whatever, and just try to make it 100x, or launch random meme coins on a pump fund and try to scam people, etc., etc. So this is just a very general explanation of the DeGen type of a trader. Also, they usually trade on emotions, FOMO, and Twitter hype. If someone starts to speak about it, they have different bots trying to buy it as quickly as possible. They also, because they don't have a mature experience on market, especially psychologically, from the mindset perspective, they usually are driven by emotions. If something is massively going up, like a meme coin or something, they also want to jump in right away, quickly. And those decisions are FOMO, based off emotions. FOMO is just fear of missing out. So if you see some sort of a KOLs, influencers that you follow, or multiple KOLs at the same time starts to promote some sort of a coin, they usually jump in based off emotions without even thinking, because that's the hype narrative, so to speak. And in most cases, I could explain in very detail how all of these launches are coordinated, how they are pre-planned to dump on you, and you being excess liquidity. But because I've been in this space since 2017 ICOs, I saw it all, many things from the technical background as well. So these things are extremely sad, to be honest, that they are allowed to happen. But well, that's the world these days. These people also spend all day trading, stressed and burned out, trying to make it. I mean, I know people myself that are based off this lifestyle, DeGen trading, trying to find some sort of a next big meme coin to push. And they even set their alarms in the middle of the night just to check the price, check what's launching, or if they have any positions open on a very risky low cap meme coin. They have alerts in the middle of the night and they're checking the charts. Doesn't make much sense, does it? High leverage, no risk management blows up accounts. This is also a standard, especially from the perpetual futures traders that are like young people trying to make as much money as possible quickly. They usually use high leverage and no risk management. And in most cases, liquidation happens. And then those people are flushed. And when you see on a Twitter or news outlets posts like, oh, 20 million, 20 billion, whatever it may be, amounts was liquidated from the crypto market, it's usually those people that are highly leveraged and trying to make it as much money as possible in a very short period of time. And this data is public, and this data is usually happening on centralized exchanges, and those people responsible for these things, market makers, they see those orders, they have full transparency, so to speak. So when there are enough orders available at a specific exchange or whatever it may be, they just simply manipulate the market and liquidate everyone. So this is also not a sustainable system. Also, they usually treat crypto like a casino and not an investment. If you speak about, I mean, you see people um, a bragging luxury lifestyle, etc., based off the crypto trading decisions. They have different algorithm signal groups or something like that. It's basically like a game for them, like a casino, so to speak, right? And usually those people tend to have more likelihood of gambling as well. The ones that are actually chasing those extremely high returns and those meme coins, etc. And usually, lastly, those people usually boom or bust cycles, and there is no sustainable growth. So it's either everything or nothing. That's it. And some people that make it out of the trenches, so to speak, through some sort of a meme coin, only the very, very minority will actually fix their life and continuously invest in a safer assets, etc. The majority of people, I even know people, myself personally, that made a few 100K, lost it all, and is now trying to rebuild that stuff again, which is not sustainable long-term perspective. And now let's take a look at the DeFi investor. That is, in my opinion, it's the most mature and professional approach to the market. So being a DeFi investor is more like a strategic wealth building. And your assets, your cryptos are working 24/7, earning stable API that is usually at least 10 times more than any traditional financial markets, meaning bonds, commodities, or stocks, for example. I mean, of course, some stocks are very volatile, penny stocks or hype stocks, etc. So they can also outperform. But I take a look at the general consensus and the general average. In DeFi, you can generate usually at least 10 times the returns. So what people generate in a year, you can generate in a month using DeFi without exposing yourself to any unnecessary very high leverage or risks at all. Also, you profit in bull and in bear markets with strategic positioning and hedging. So in DeFi, we don't chase the next big thing, the next big coin, meme coin narrative, anything. It doesn't matter to us. All we need is for people to trade, for people to click buy and sell, buy and sell. And the more they do that, the better it is for us. And DeFi pays, so to speak, because not from the magical perspective, it's just simply if someone is trading on a DEX, they pay the fee, that fee goes to us, people like me, liquidity providers, right? But it happens in all market conditions. If if the market is very slow, like the last few days, it's been pretty sideways, the returns are lower, but I'm still getting about 0.3 to 0.4% daily across multiple protocols and pools without exposing myself to any volatile asset, like extreme volatile asset. My exposure is usually ETH, Solana, BTC, and these days is FXRP as well. It's like a big blue chip assets. I'm not exposing myself to meme coins or any low cap coins at all. And even when a bear market starts and everything is dropping, people are losing their minds, etc., we can rebalance the pools using different strategies that we know and basically continuous yield. Yes, the returns will be lower, but they are sustainable for a long-term perspective. Also, as a DeFi investor, you automate your strategies and compound wealth while you focus on life, because basically there are multiple protocols, tools available right now and being built as we speak that lets you automatically compound your yield, automatically reinvest money, rebalance the pools, etc. So basically you just allocate once and you start compounding automatically if that's what you want. I, for example, don't do that. I like things, manual things. I like to do it myself, but there are tools. So you focus on life, your money is working for you, automatically managing everything, and you just chill. Yes, it requires a bit more capital than just $50 and trying to catch $1 million in meme coins, but even slow amounts compound pretty quickly. Once you start um, entering into DeFi pools using correct approach and correct deposit ratios. There are multiple mistakes people make. I have a video about it, top 3 mistakes that DeFi newcomers do. So definitely check that out. Also, DeFi people are usually diversified across multiple protocols and risk levels. So you have treasury, your long-term assets, you don't touch them, you borrow against them. You have capital deployed in the biggest protocols with lowest returns, but the safest places, the least volatile assets, right? Then you have some fun capital, so to speak, deployed into the riskier assets, more volatile pools, etc., where you also are able to generate way higher returns, but at the same time, you take on a bit of a higher risk if market turns against you and the fees you generated, the yield you generated is not offsetting the losses from holding those assets, then you are in a bit of a trouble. But even that is possible to rebalance the pools in certain ways, so you still earn the yield without buying back the assets with your realized losses, and you can still through time offset any kind of holding losses with additional yield being generated on a regular basis. So there is just the only thing you have to do is learn the strategies and apply them. It's not just as simple as deploy money into the pool and leave it. You have to rebalance, you have to think about and manage those positions as well. Also, DeFi investors usually tend to have deep understanding of protocols, tokenomics, and yield strategies. That's a sustainable skill to have for a long-term perspective. Because before, people used to focus, and even these days, people are focusing on just those hype narratives, NFTs, meme coins, launching coins, pump fund generation, whatever it may be. But once that narrative dies off, then you are left with no knowledge, no experience. And DeFi was an amazing thing to know, is and will be. So this is a long-term sustainable skill to have, to master DeFi protocols, to understand how these things work, to understand how to deploy capital, how to get yield, because more and more and more opportunities are being built, different protocols, borrowing against this and that, tokenization. You can now even buy some stocks on Solana, use those stocks as collateral, borrow against them, using different DeFi protocols, right? While those stocks are appreciating in value slowly. It's just endless ways to generate yield. You just have to have the generic skill of understanding how DeFi works, and then you're basically good to go and experience it all for yourself. And then lastly, usually DeFi investors, they have exponential compound growth through reinvesting yield, right? And if you ask a simple holder, okay, so you had your BTC or ETH, whatever, for 5 years. So what happened? And they will say that it's either increased in price or decreased in price. As a DeFi investor, if someone asks you, all right, so you had your ETH for the last 3 to whatever years, right? So what happened? Like, what's happening? And your response is, yes, before I had 5 ETHs, now I have 7. Because I compounded, I reinvested the yield, I basically staked my ETH, borrowed against it, deployed to capital markets, I generated more yield, I compounded, and now at the end of the day, I made additional 2 ETHs without touching my original 5, so to speak, right? So you can always compound and make exponential growth, because the first few days, the first few weeks of compounding will not be you will not feel it, so to speak, right? If you had a $1,000 into the pools, you start generating, I don't know, $3-4 a day, all right, from your 1K, but you always compound, you will not feel a massive difference for the first few weeks. But after the first month and second month and third month, you will start noticing that you are actually exponentially growing your position, your portfolio as well. So this is very important, and I believe that this comparison between the regular holder, DEGEN trader, and DeFi investor is really necessary to understand what kind of positions and how we approach market from a DeFi perspective. All right, because we don't need to buy and hold. We don't need to trade and find the next big thing and risk our money on gambling mindset. All we need to do is have capital, slowly allocate it, right? Get the yield, reinvest, compound, etc. There are multiple ways to do things, right? I just showed you the very introductory high-level understanding of why being a DeFi investor is the most mature way to be in crypto market. So hopefully you will benefit from it. You can take a look at my previous videos. I have over, I don't know, maybe 15 of them, giving you full education, because I believe that education must be free. And DeFi House is a project of community, and the only thing you are paying for is not education, how to make money, but my time to answer your questions, to provide daily updates and show my positions, etc. That's the only thing. But if you watch those 10 videos, like from 1 to 10, a free DeFi education, you will be making your first money in DeFi the same day if you watch it through the whole. And I mean, if you watch it today, by the end of today or tomorrow, you will be already into the pools generating yield. Simple as that. So my best suggestion with DeFi House is to actually watch the videos for free, because they are all on YouTube. Watch the videos, allocate some capital into the DeFi pools based on the videos and the knowledge you received, generate yield, and once you start generating yield, then if you wish, you can try and join DeFi House and see it for yourself, whether you like it or not. But you will not be risking your own money. You will be risking the yield that you generated for the membership, so to speak. So that's my approach. There is no pressure to join, because I really like teaching people, and I don't like charging for education. I don't think it's fair, and it just shows the point that what I've been doing, the channel is growing nicely. I really appreciate every single one of you watching the video, subscribing, and sending me messages. I absolutely appreciate that. I try to respond to every single one of you. So hopefully this video will also be beneficial, so you will have a better understanding what is the difference if you just buy and hold, if you just trade, or if you participate in DeFi. So once again, thank you. Have a fantastic Sunday and upcoming week ahead, and I will see you as always on the next video.